Welcome back. Happy Monday is over. Happy Monday. It depends where you are, what you're doing, who you are. What's your portfolio looking like? What if I told you that if you were trading through the Dow Jones Industrial Average, you were break even today? But if you traded just about anything else, as in the NASDAQ was down over 2.5% today. But if you just traded through banks, energy, industrials, anything with commodities, healthcare, you did really damn well. You might have actually put quite a bit of points on. Most of it was from the open. From the open. Um, what's happening? It's just more and more inflation speculation coming into Wednesday's numbers, right? It's the same story, the same thing we continue to see. We're just seeing further rotation, which I am surprised that we're seeing more still. You would think that if you were rotating positions out of growth, you would have been doing it already. You wouldn't really expect there to be this much more, but it is. This is, again, the exact same thing we've seen every single day. It's been the exact same story. There's nothing new here. Now, whether or not prices are going to hold on growth here further, it's kind of anybody's guess, right? I talked about this morning that I was looking here around the trend line in this support here. Now we're back. We actually broke the lows from this local low. And so whether or not NASDAQ, specifically these sort of mega caps, are going to hold up down here is a question. Now, I put some short-term bets on, betting that this is basically going to be the low, mostly through Apple and Amazon. I think Amazon might have some deciding to do. Talked about this morning of maybe looking to push their stock through with a split or buybacks. But either way, what I'm looking to do is just for a little bit of risk, since I'm not long on these positions, put a short-term bet that this is going to go up by tomorrow at least. So we'll see how that goes tomorrow. Tomorrow should be neutral going into Wednesday's numbers. But I mean, guys, again, look at the difference between when we look at some of this stuff, right? Now, banks and energies did start to sell towards the close, but again, it's break even on the day. It's a big difference between being break even and being down 2.5%, right? Those are significantly different. It's such a difference. It's me at the gym today, riding my Peloton, and then there's two bozos lifting dumbbells, and they're going, "Oh, we gotta go, we gotta get back," because the market's going down. I'm riding my Peloton, looking at the Dow Jones go up. I'm like, all right, I gotta keep pedaling here. These two bozos are running by me because the Nasdaq's going down, right? That's the difference, is that I can keep biking. They have to stop lifting their little 5-weight dumbbells. Looking at our list, there were opportunities to continue to, of course, make bets on the value side. So we've actually had a lot of charts do a lot of what we were looking for. And I think one of the big ones is this PG chart that is a part of the Dow, which when you talk about this consumer side, we're now at this level here, which again is what we're looking for, but it's this kind of trade here that this is sort of, it's not easy, but it's a technical sort of trade that we've talked about and looked for that, again, you can continue to make bets on these trades as they come through. And you get a big candle like today, you could have just taken that trade and that's a lot of points. 2% on the underlying. It's a lot of points on the derivative side, right? And if you look through, there's, I wouldn't say the best sort of swing sort of short-term opportunities. If you look at what the charts I posted from this weekend, a lot of them got fucking destroyed. The most value-oriented did the best. Those charts did the best. GE pulled back. We saw sort of this aerospace and defense move sort of show a lot of bid. I like these candles. I do like when the candle is like that long upper shadow. Sometimes it can be bearish if it's coming off of a trend, but some of these, again, have not been the greatest. In terms of travel was pretty interesting because, again, volatility being added to something that's already short-term volatile can cause a lot of problems. We actually saw things like AL actually hold through here, which is kind of surprising considering it put a lot of points on Friday. Some of these were a little different. So when you look through the entire travel side, it's holding this trend. it's still a trade to be had here and to push through. It's the problem is that you have this volatility and a lot of different things coming all at once. We'll have to see. This is definitely a wait and see. Sitting in these positions that we took from Friday, but we'll definitely have to see whether or not these are going to continue to push. We mentioned sort of the difference between somebody mentioned save earlier in the day and talking about the difference. The larger size is going to do better, and you can see the difference here. Save was -2%. AL was break even on the day. Again, people are specifically putting their money towards blue chips, larger companies, right? It is having a big difference, and again, like a day like today, if you're positioned, it you everything looks the same, and then something like during lunch here starts to happen. There's a big difference between being positioned through the blue chip and the larger cap sized ideas through value and not being, right? These are both these charts look the same coming into today, but there's a big difference here, obviously, right? You could just sit here or you needed to get out, and you're in a bit of a time crunch trying to scramble out of that position. But again, there wasn't many, I would say, opportunities other than you get to hold. You get to sit there in your positions. I know a lot of you have basically positioned this way. We had a pretty good day. We had a pretty good day. I mean, we can definitely get negatively affected by what's happening with volatility on the Nasdaq, but I half of our list is green, half of it's red. It's not the worst thing in the world, right? And again, the problem to be solved is now going to be this. So Wednesday is CPI numbers. Today, everyone's basically going, okay, well, it's going to show higher prices. Now, this is really being led by commodities right now. It's important to remember that CPI is going to show us our prices increasing. We already see prices increasing in commodities every single day. And so that is already directly leading in. And so you have to remember how that commodities market actually also by just increasing is going to increase the pricing of other parts of the economy as well. And so that's why a day like today starts to happen. You have copper hitting all-time highs. I talked about steel this morning and how we're doing well on the steel move because it's now just coming in. We had the iron prices over the weekend. These commodity prices are going to directly lead into Wednesday's numbers. And so you get more rotation here. It's just, again, it's not a surprise. It's just a shock of how much, right? And we're directly following it. We can see the money directly going elsewhere. And so when we talked about the dollar this morning, you can see how this sort of changed. As soon as that growth move started to change, the dollar stopped moving down. It started to be stable because again, you have this transfer of flow. You have money still coming into gold. So this is again the commodity we're going to be watching in terms of is this going to change in its story. But this isn't so much linked to CPI or anything like that. So there's not so much inflation on the gold side. If we tie it all together now and bring in things like crypto space, Bitcoin continues to come down here. We had Doge come down from SNL and stuff like that. So we can at least maybe look for retail if they're going to enter the equity market here this week. But crypto is still not doing much of anything. So again, we know where all the attention is, right? All the attention is going to be on the value side is already, it's just going to continue to trend, right? And I think it's proven a day like today again. Nasdaq's down 2.5%. Dow is break even on the day. The problem to solve is not that trade. The problem to solve is whether or not growth is actually going to be able to catch it better or not. And it's a question of whether growth is still growth. Because what's happening is the value side is becoming growth. Those are going to grow. And so tech is not the only thing that can grow here. We have actual sort of manufacturing companies and things that are tied to consumers spending more, which are growing. They've gone from one thing to another, and they're projected to do more, and there's sort of no end in sight. This is where do we start to price in this idea? I still think, again, mega caps are a different animal, and it also comes down to a little bit of hunting starts. If, again, I talked about this, you have some of these tech companies, like for instance on like the solar side and all this, and some of the maybe the chip makers and things like that. If their prices are coming down, mega caps are going to swoop in and eat them. That's it. That's what happens. Every single time a software company starts to lose value, Microsoft or Google buy it, right? Or they buy it before they even become a thing anyway, right? And so if there is an opportunity there, it's going to happen. This is, uh, it's going to be a problem to be solved if this does come down. And I mean, I just don't see it happening with mega caps, but I think it's proven that it's just happening to everything else. I mean, they're not even I mean, some of the shit's not even holding. It's not even close. Like if let me see, if we come down here to the very low, if we look at some, let's find something more software oriented that we can be like, okay, okay. Maybe space is not a good example, but space has continued down, right? It's just not going to catch anything. There's no point to go throw yourself on this, right? There's no point. Retail's not going to come in here either. So there's earnings, doesn't fucking matter. Now it's at 17, right? There's a reason why we haven't touched this here, right? Space even pushed out their earnings. They pushed it out 10 days. But like this is coming down. But if we look at, okay, here you go. We start to look at some other software companies that have continued to do this move here, right? They're not going to get help. A lot of these are not going to get help. Like, is apps here going to bounce on the support? You're getting further and further to being unlikely, right? And this is where the question comes in. We don't so much need any of these to actually stay afloat. As long as mega caps are consuming more and holding price and continuing, then that's enough. But again, you look at some of these, what's going to happen here? And this is where you don't need to trade it, but there's still a problem to be solved here, and it's that are these prices, if you and I aren't buying it, right, and no one else wants to buy it, then they're just going to keep going down, right? And so we continue to discount their future outlooks because of inflation, because that's what happens, right? And it only gets worse if interest rates do go up, which is directly what happens if inflation does happen. And so you're getting a lot of that, and this is again where maybe ETFs need to come in, and hopefully those that are positioned here, are able to hold on, or else this shit is going to look like this, right? This is what every software company looks like right now, right? I think even like when we look at Square Inc., I think this has definitely been directly linked to ARK and Bitcoin coming down. Again, where and how do these get saved? We're trading our own thing, right? But these are still problems that need to be solved. And so it just doesn't look very good when you start to look at some of the stuff like Neo getting pummeled still. What's happening with growth over here, right? We're sort of we're definitely leaving it behind, and it's very hard to go take these trades. Besides mega caps, I can't find myself making any of these trades here. I just don't see how you can do it. And again, like with semis now, even I've been talking about the semi trade. We're back to the low here. I just don't see how I can go make this trade again, right? There's too much success and there's too much rotation going to that value side, and there's almost you're getting to a point where the risk continues to increase so much for whatever upside reward there's going to be, that you're going to need to wait for things to consolidate and for the problem to be solved. And the problem is again, what is this? What am I buying? What exactly am I buying here? It's not, again, we're not buying companies. That's not what's happening. We're buying a future growth and a future prospect of value that at some certain point it'll have something, right? Like Tesla at some point will make more cars, we think. But if these things are happening now, prices are increasing, this is where the biggest will thrive and the smallest are going to just fucking die, right? They just don't, it's too expensive. Think of, I was reading an article today, and it's important that for housing, for instance, right? You have developments being made, but lumber prices and the cost of all the nuts and bolts and the tools are going up so much that those companies are going bankrupt. They can't even build the houses in time because the prices are going up so much. So what happens? Well, they cease to exist, but somebody else that has enough money comes in and they make more money, which is great, right? That's great. But someone else just lost, and this is the same thing in the equity market. We sort of have this dynamic where if you're not big enough to actually handle this price problem, then you don't actually get the higher profit, right? It's higher revenue, but it's higher costs as well. And so it just it's taking a little bit more. And this is where we have had that shift from, we talked about the small cap dynamic, we are far past that game, right? We have really exited that into you need to be big enough. And this is again where consolidations start to happen. You get mergers, you get a ton of acquisitions. I would say right now is probably as close as we're going to get to some of these, needing a hand. Like someone's going to need a hand here. And so when that starts to happen, that's again the only way to trade that is you get lucky on trading one of the companies that are going to get bought, or you just buy the beast anyway, which are the mega caps. And so for growth, that's it. There's literally nothing else we can do. So we'll take these trades when they're, again, I like the move like this. I've talked about this move like here, right? Where we get a few candles and we coming through here. It's a little bit of confidence buying, retesting. I'm okay with taking trades like that, but it's just not even. It's so far away from this that I have to go manage that. I can just sit in this all day, and you guys should too. There's literally nothing else you should be doing. You throw everything behind this idea because, again, it's just getting started. You're just getting rotations now, and it's hard to think that this is going to go anywhere. The numbers are just going to continue to back up what we've been seeing here. That we have, for instance, we have OPEC coming out tomorrow and releasing like supply and demand numbers, right, and forecasts. Even if they came out and said that demand is not going to be that high comparatively, it doesn't change the fact of what's happening right now anyway. It doesn't even matter. And so it's already been bought. We already bought the futures. We've already bought it here, right? And so, you have some neutrality coming into the numbers. This is going to hold still. And energy is actually trading past oil. And it's actually completely trading past. Why is it trading past crude? Because the equity market knows better. We already know better. We're speculating with inflation. We're not speculating on futures pricing. Because again, the future prices are, it doesn't matter what you think it's going to be in the future. It's about what it is right now. And that's what the difference is that a lot of the times the pricing in the equity market is some future value we're trying to price in. The difference is that value tickers themselves, we price on right now. And they're getting the money right now. They're getting the spending right now, right? And so there's a big difference here. And again, the futures thing kind of throws a little bit of a wrench in there, but it is for right now. But futures contracts do have an expiration, so it does change how you're forecasting them. It doesn't. This is the best thing to see is that this has continued to go one way, and the real dynamic here is to follow the companies, and they know better. Banks keep buying themselves back. Banks did well again today, broke even. This is just it's really easy to see where to be, and again, even the healthcare side. Like I've said, it's pretty straightforward. There's nothing when you see some of these charts and some of these for instance, these sectors, right? These are full sectors. When you see these entire sectors, these are 3 so far, 4, because manufacturing infrastructure as well. These 4 sectors, they don't react to anything. There's nothing else that affects them. It's the same orders every single day. The only reason why the Dow index itself is down is, again, you look over here, it's just the tech companies. Intel sucks. It sucks. It's going to come back, but it does suck. Apple, Microsoft, Salesforce is terrible, much worse than Intel. But it's just the tech companies, and then everything else is basically break even or positive today. Now, V here is interesting, but I do think this is actually probably a bullish move. Some of this is hard to price in, or what exactly the trading is here. This can certainly be a lot of different reasons, and we've seen things like PayPal come out and say they're going to be branching into different areas. We've seen Europe came out and said they're going to start to take on the big card companies. These things could be a factor. I still think that this is, even when you try to go like technical on it, it's pretty like you can see a flag or something here happening at some point, right? I don't think there's a pattern or something like that. I just think that this is not going to go anywhere, and it's going to hold value at least. And at the very least, it's a part of the Dow, and the Dow is doing fine. So when you start to look at these again, there's so much bullishness out there that even when one of the tickers is down in a sector, for instance, like aerospace and defense here, even when one's down, the rest are up, and you get this dynamic that, again, Sometimes it's going to be an off day. Sometimes it's red. Sometimes it's green. But overall, they're still trending up. You just need to be a part of it. Keep the money there. Stop trying to guess the growth thing. The only thing you should be doing there is, again, sort of this game of, okay, mega caps pulled down. This is probably the low here. Got probably pretty good probability, and you take that trade for short term, or in the very least, you go, okay, Apple's going to be up 2 years from now, so you take that kind of trade, right? But otherwise, trying to play the game of, oh, I think this company might, I read their statements and they may one day be able to have a new thing. That's not going to work right now, right? No one's doing that. No one's doing it. You're doing it by yourself, right? You're reading Twitter posts and stuff by yourself. That's not going to work. And it's these blue chips and things that are proven that are going to do well, and the people that have money and everything else. So you gotta stick with what's working. Don't reinvent anything. There's nothing to do other than trade. There's only one way to trade right now. That's honestly the truth. There's only one way to trade. And we've been trading this way for a while, but now everyone else is doing it. That doesn't mean we all of a sudden stop. At some point, yes, there's going to be, moments where it stops, and this is where transitions come in, right? You need to be transitioning. Today, you could look at today as maybe one of your transitions days on some of what you looked at, right? You see that there's weakness in the market, and so you start to take profit, and maybe you look to re-enter tomorrow at open, right? Some of my transitions were last Friday. We did have some today at trend lines. I talked about Mobsky. You brought up LUMN, for instance, right? That definitely lined up very nice for some sort of transition in this area. I think when you got up to 14 and a half, that's where we were talking about looking in there is a good spot. There's opportunities to do this at any point. It doesn't really, again, it doesn't always so much matter if it's an uptrend. You just need to decide where to pull that trigger and do it. That's going to basically work for yourselves. And you could have done this again. You could have done it here. It's just about getting into that new position and not wasting the time and sitting on money, right? But again, as long as we're trading through what's bullish here, I mean, again, it doesn't really matter what else other people are doing, or if other people are losing money, or if the other side of the market's not doing well. It doesn't matter. Like, I don't care that the Nasdaq's down 2.5. I care that it's a problem to solve, and I want to solve it because I want to make money. But I don't care that other people are losing money, because it's not. Again, it should just be about what's actually happening, what you're doing, and what you can do better. And there's definitely places we could have done better so far. I think, if I critique myself, I went way too ham on this semiconductor idea. Now, I'm probably right, and I think the market's pricing it incorrectly. But the reality is it's still not happening in this moment, and so you just got to be patient sometimes, right? And I think that's a good lesson to have. It's like you may have some information or think you have it the right idea, but the problem is that it's not up to you, right? It's not up to my opinion. It's up to the price. Now, again, I'm making decisions off of the price, and I did fine. But that money that I spent on some of these things, I could have just thrown onto my value trades. I could have just thrown that on the fucking Dow, and I would have made the money that I lost here, or the money that I wasted my time on here, twofold on the other side, right? And that's where, again, you need to figure out with your own capital restraints what is the best way to utilize your money. I've been 90% value, and the other 10% has been to play and to try to solve problems, and they haven't really worked out very well. But that's why 90% of my portfolio is in what's going up and just trending, right? If your percentage is a little worse than that, and you got like 50% as value and the other 50 is to do whatever dumb shit we're trying to do here, it's probably not going to help, right? You're not going to do well there. You just get too many things are going to go wrong. We have a lot of different economic events have been happening, and there's just too much variance in different things that could happen, right? Like, for what's going to happen with this is the thing. It's like I'm putting on that mega cap position because we get China numbers tonight. Now, I think China's CPIs are going to look great. Okay, so China's all tech. So I think that the China equity market's going to be a little bit, lit. It's going to be ignited tomorrow. So tech should be opening up higher, which means I can just take that trade, take profit at open, and feel good about it, right? So I have some probability there. it shouldn't be just, it's down, I'm gonna buy it, right? Oh, it's down today, so I'll buy it, right? That's probably not good. So again, you do need to have some sort of ideas behind this market right now. Otherwise, you're just sort of in the middle of nowhere, and you're just kind of, again, you're just guessing. You're literally just throwing darts at a board if you don't have these sort of structural macro ideas behind your trades, because there's too much going on right now. There's too much rotation. There's too much. It's not like whistleblowing, but it's everyone is running to the same thing and the same purpose. And I mean, it's just getting started, right? It's just getting started. So definitely be well positioned. I think this was a really fun day. So I think when you look at where this started to go on, right? When we think about this move here, I mean, it's not easy. This is not easy. Over here, I started going, okay, I'm gonna pull the trigger on these. And then this move here, you're dojiing on the level and you don't really think much of it, right? You don't really think here. This is I mean, you get into 2 o'clock and uh, shit starts to go on. So I mean, it's not easy, right? But we know better than to try to pull the trigger heavily on this side, right? And that's where, again, it's just these are they're two different things. One side of the aisle, we're pulling the trigger on every single pullback. The other, we're scratching our head and are going, are we sure? Are we sure we want to buy this? So, those things should be different. Otherwise, I mean, I think it's a lot of fun. I think this is a lot of fun, and to see how, again, to see how the market's going. Oh shit, we do have to keep buying value, don't we? And to see how it doesn't budge, right? It doesn't even move. Nothing even happens. It's the same orders every morning, and you continue to see the same thing. What's going to happen tomorrow, right? What do you think is going to happen tomorrow? Right? And this is where we should get neutral. Today was neutral. Look, we broke even. We broke even today, so it was neutral going into Wednesday's numbers. I mean, what are we doing tomorrow? Are we going to get even more toasty tomorrow, or are we going to stay flat? Right? These are, I don't think, questions that can even be answered. And so again, you just need to be playing the price game. There's no reading articles or trying to get opinioned, and it's just going to come down to what happens in that moment and whether you're positioned in a way that's defensive against it or not. And so, excited to see China's numbers. I didn't really take any China bets or anything. I don't. Again, the China side of the market has been a little bit in shambles. The BABA trade did well, but there's a lot more red in between there, so it didn't really do well, did it? So, whether or not China's going to do well is a big thing. The numbers on Wednesday are going to be a big thing. Friday is going to be big with retail stores, retail sales numbers. I think we're in for some fun this week. A lot of volatility, a lot of opportunity. So again, you you know you should definitely be fully positioned on what we've been talking about. But if not, then I mean, you still have a lot of money that, again, if you have a lot of cash right now, you still have a lot of things that you can play around with, and there's a lot of risk that you could take. I mean, it could pay off. It's just how exactly do you do it, right? How do you take some of the risk trades without basically blowing yourself up? I don't know if that's a risk I would want to take. I would just go buy the fucking Dow. So, so it's just gonna be interesting, right? This week is gonna be very hindsight heavy. I can already agree. I mean, I can already see it, right? It's gonna be very hindsight heavy, and trying to learn from what happens this week, because again, we're starting it off very similar to how we started it last week. This is how we started last week, if you remember. We actually started it like this, and so maybe look back to last week and see where you went wrong, so you can pull the trigger right this time, right? Maybe do that. Go look at what happened last week, how we started Monday off, going into Tuesday, and see how exactly uh, exactly you can make a move. And uh, if not, then just be patient, right? Be patient. Let me look at the profit section. Mobsy with the 4%. LUMN and J&J. J&J is definitely a nice trade still. Again, that pharmaceutical thing that's going on, J&J is definitely not getting as affected. Basically, also getting the blue chip derivative love. So in the LUM trade, definitely, if you got that, that was very nice. So Sweet. And also, I saw Makisa. She got 120% on SPY risk. That's awesome, buddy. I mean, good. Why not? Why not? That's what I was talking. I mean, we took that trade, so I'm glad you jumped on that one. But why not? Right? I mean, if you got out early enough, you'd be back to break even if you didn't get out. But obviously you did, so very nice. Again, you take the risk when you can, and that's what we do it for. It doesn't always pay off, but when it does, it pays. So I'll see you guys in the morning. In terms of charts, it's going to be a lot more of the same. You guys saw me updating some charts, so some of them will be getting some updates. So definitely watch for that. There's going to be an ass load of short-term patterns in terms of what topped out today. So again, whether or not that's the top of a swing, right? You get like a swing up here, and then it swings down because of a bearish candle. It doesn't exactly mean it's going to be the end of the line. It just means tomorrow is likely to continue with that, and again, we buy on that side of it, those sort of events. So we'll see exactly, but I did see a lot of bearish short-term patterns. So we'll see what that leads into. Have a good night, good evening, good morning, wherever you are. See you in the morning.